Realty Income buying Spirit Realty in the $9 billion deal is going to instantly take Realty Income from not only a big REIT to now a mega REIT. And although the deal is expected to cause some dilution for Realty Income shareholders, the company's cash flow and profits per share is expected to also skyrocket in the future. In this video, we're going to go through and take a little bit of a deeper look into this new deal Realty Income initiated and why and how this offers huge potential for long-term Realty Income investors like myself, which as of filming this video, I personally own over 2,600 shares and also have been buying more and more daily. Now stick around, drop a like down below, and let's get right into it. Before we get into today's video, make sure to please hit the first link in my description to support my brand new Patreon to access things like my 31-page A to Z dividend investing ebook, access to my brand new custom dividend tracker to track all of your ongoing progress, to view my 7-figure dividend portfolio, and so much more. I can't wait to see all of you guys inside. So Realty Income, the monthly paying dividend stock, has had an excellent track record when it comes to generating shareholder value over time. And this is especially when we look at the long-term view. But this last year for Realty Income, along with pretty much all the REITs across the board, has been pretty rough. Realty Income has always been a REIT that puts a lot of focus on growing the business and expanding onto more and more things, which in the past has happened across two main ways. Number one, by acquiring assets and asset portfolios, and by acquiring entire companies. And while some investors don't really like the strong growth focus when it comes to more of an income-oriented investment, Realty Income's aggressive growth has worked pretty well for investors, at least so far. Now looking a little bit deeper into how Realty Income is trading right now, ever since the news of buying Spirit Realty, Realty Income hit a new low of under $46 per share, which is kind of shocking, considering that's basically what we saw in 2020, the same range, which I honestly didn't think that Realty Income would drop that low, especially off some news that I particularly think is sort of bullish. Now this brings Realty Income's year-to-date performance down 25.38% and over the last year down 23%. Although I think it's important to mention that since the news of buying Spirit Realty, Realty Income has been trending back up, which is honestly sort of what I expected. Now the opportunity for long-term investors right now, in my opinion, has almost never been as good, considering Realty Income is offering a 6.48% forward starting dividend yield. Now I get it, right now you can invest in treasury bonds or CDs and get a guaranteed, say, 5.4, 5.5% yield, but with Realty Income almost offering a 6.5% forward yield, and with their almost without a doubt being upside potential, at least in the longer term view, I think this is a great opportunity, which is why I've been buying shares like crazy. Also important here on stockanalysis.com, looking at some of the forecasts when it comes to Realty Income, it says according to 11 stock analysts, the average 12-month stock price forecast for Realty Income stock is $64.68, which would be a massive increase from where it's trading right now in the mid $47 range. Now, I'm going to be completely transparent with my 2,700 shares of Realty Income right now. I'm honestly not even all that concerned whether or not in the next 12 months it moves up in price or down in price. I've been buying Realty Income like crazy for more of an income play, although I personally do think, in my opinion, there is also some massive upside potential for the monthly paying dividend stock. Now again, take this all with a grain of salt, but the 12-month forecast as of on high, it says $74 per share, which, believe it or not, Realty Income was trading in the $74 range not all that long ago in the grand scheme of things. The low is $48 per share over the next 12 months. So the analysts combined think that Realty Income, if nothing else, will most likely remain flat or around this range over the next 12 months, which I also think could somewhat be the case, because if commercial real estate does start to really crumble, and let's say some of Realty Income's tenants, which we're going to go through in a second here, do start to see some troubles ahead, maybe even with paying rent or occupancy, I do think that commercial real estate does have some headwinds ahead, although Realty Income has some of the best tenants in the game. Now, before we go any further and look a little bit deeper into Realty Income and Spirit's portfolios, which I definitely think is important, especially if you hold on to Realty Income, quickly comment down below the price that you think Realty Income will be trading at 12 months from now. Go ahead and do it. Now, also important to mention, Simply Safe Dividends did reaffirm a few days ago that Realty Income's dividend is once again safe, which again, take this all with a grain of salt, but Simply Safe Dividends is normally pretty accurate in my opinion. Also important to mention, additionally, management has stated that the deal will not affect the REIT's current dividend policy, which is very important, especially for the more income-focused investors like myself. As such, we are reaffirming Realty Income's safe dividend safety score, which is very important. Also important when it comes to the deal with Realty Income and Spirit, this says that furthermore, while Realty Income will assume Spirit's outstanding debts, there will be little change to the REIT's overall debt profile, with less than 15% of the combined firm's fixed rate dates maturing in the next 3 years. So hopefully over the next few years, rates will come down from the Fed, and this won't even be as much of an issue, but that's also very, very bullish. Now, lastly, I think it's important to dig a little bit deeper into the top industries and top tenants that not only Realty Income have, but also Spirit Realty. So Realty Income, you're probably aware of this, but their top 10 industries are things like convenience stores, grocery stores, dollar stores, home improvement, drugstores. Those are the top 5, which make up a lot of the overall REIT, which I'm very bullish on considering these are what I like to call recession-proof industries, at least for the most part. Then we have things like restaurants, health and fitness, automotive, and general merchandise. Again, for the most part, these are industries that are going to be around, whether the economy is doing good, whether it's doing bad. They should be just fine regardless. Also important, the top 20 clients for Realty Income, we have companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, EG Group Limited, Wynn Resorts, FedEx, B&Q, Sainsbury, LA Fitness, and others that you see right here. Now, some of the biggest tenants, Dollar General, Walgreens, and Dollar Tree. Dollar General and Walgreens have both faced some different headwinds over the last year, and that has been on my mind considering Realty Income does lease out a lot of their properties to some of these names. But that being said, with Realty Income acquiring more and more different real estate and expanding, the diversification basket is only getting bigger and bigger. Not to mention heading over to Spirit Realty. Realty Income is going to pick up 345 different tenants across 2,064 different properties in 37 industries, almost 100% occupied, which is very bullish. And the portfolio composition for Spirit Realty is majority service retail, which are things like health and fitness, convenience stores, car washes, quick service restaurants, casual dining, entertainment, movie theaters, drugstores, automotive services, and early education. So once again, the top 3 being health and fitness, convenience stores, and car washes are somewhat recession-proof. But not to mention that the rest of the portfolio is also very diversified, with 25.7% being industrial. Then we have some discretionary retail, also have some non-discretionary retail, a small bit of other, and then my least favorite, which is office space. I'm personally not very bullish on office space. I could be wrong, but I'm just not really a fan. Now, to look into some of the top clients for Spirit Realty, which we as Realty Income shareholders should know what we're picking up. We have things like Lifetime Fitness, which I'm very bullish on, BJ's Wholesale at Home, also super high quality. We have companies like Dollar General, Circle K, the Home Depot. There's a few in here that I'm not necessarily the biggest fan of, but once again, that's where diversification is very key, considering that they have so many different clients, 345 different tenants, which really spreads everything around, especially in the context of adding this with Realty Income's massive, massive portfolio. So the fact that Realty Income snatched up Spirit Realty for hopefully what we're going to look back on and say it was a pretty good price, is this going to be bullish for Realty Income in the future? I suppose only time will tell. But with Realty Income trading just above the mid-40s now of this range, this stock, in my opinion, is almost becoming too cheap to ignore, and I think a majority of investors across the board are starting to see that. But now I want to hear from you guys down below when it comes to Realty Income buying Spirit, and the future of this REIT. Are you currently buying shares of Realty Income at these levels, or are you sitting out and waiting for a better entry? Comment down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.